So my name is Shihan Abeyguna. I'm based in Singapore. I head up Morningstar's business development team for Asia.
So how does it feel to have an in-person event again?
It feels great. It's nice to see everybody in person. The last time we had an event was in 2019. And so over the years, we've been conducting it virtually. And this year, it's nice to be back in Malaysia, meeting with the winners and reconnecting with friends, associates, and also very familiar faces at Smart Investor as well. So it's been great.
So 2022 was actually supposed to be like a turnaround year for the market, but instead it took everyone by surprise. So could you give us some comments about why that was and how hard it was or how good it was?
Yeah, that's interesting. And I was preparing for my opening remarks yesterday. And, just the amount of times, just looking at the speeches that I've done over the course of the years, the number of times I've used the word unprecedented. It's just used it every year. But I think last year was definitely unprecedented, because inflation was one of the major market factors, right? Which was driven by whether it's supply chain or whether it's the stimulus over the course of years, China, right, lockdown. And also along with that, the tightening monetary policy, for the first time in a long time, we saw both bond and stock markets having a downturn, right? So global stocks were down 30%, bonds 20%. So if you're holding a 60-40 portfolio, investors were really struggling, right? And then there was the war in Ukraine as well that was, turning a bright light into, the energy crisis. And people were talking about, ESG as a big movement, and all of a sudden there were investments around, fossil fuel-based investments in order to make sure that people have supply to their energy needs. But from a market's perspective, it was a very tough year. We spoke to a number of asset managers, and there were outflows in general. I think Bryan will cover this later on as well. If you look at overall the active management landscape, I think there was about 1.3 billion in outflows. But there were a few bright spots as well. I think ESG funds attracted great flows last year. I think it was about 100 billion in assets. And it just goes to show that ESG is actually, despite some of the scrutiny that we're seeing, I think we're at an inflection point that it's going to be a major trend that's going to last generations. And also the people, investors, both institutional and retail, who focus on allocate assets to ESG, they tend to be longer term investors in nature. So regardless of the market cycles, they tend to believe in the merits of the products that they're investing in, and they're willing to ride the course along with market cycles.
So maybe going off of that, do you want to elaborate a little bit more about what Morningstar has planned for the future?
Yeah. Few areas. So research, we're a large independent research house, so we'll continue to invest in our research capabilities. We cover research across a number of different asset classes, so whether it's mutual funds, equities, private equity, those are the main asset classes, as well as fixed income as well. From a research perspective, what we have found is that no matter how many analysts that we have, the coverage that they have is not enough. Our clients are always asking for more. And we can't keep hiring analysts as a result of that demand. So we've invested in artificial intelligence-based research solutions. So from a funds perspective, our analysts, we have about 120 analysts that cover about 4,000 strategies. But by introducing artificial intelligence, where we have an AI-based model that replicates the analyst's thinking, we've been able to expand that coverage to almost 100,000 strategies globally. So we'll continue to invest on those capabilities so that we can complement the great work that our analyst team is doing. Then from a ESG perspective, Sustainalytics is under the Morningstar brand, and Sustainalytics is one of the major ESG research houses globally. They're one of the leaders in providing ESG risk metrics. And last month, a couple of months ago, we introduced impact metrics, so we can provide better indicators based on companies' revenue alignment for SDG goals. And over the course of the years, we're looking to introduce more metrics to provide insights around climate-related risks as well, such as physical and transition-based risks. So we have that in our product pipeline. And the other important area is around private markets. One of the biggest trends that we've been seeing over the last decade or 2 decades is the convergence of public and private markets. And with private markets, we've seen increased investor allocations to private market or private market asset class. And as a result of that, there's been an increased need for a more scrutiny, like a robust lens to evaluating with its venture capital or private equity type products. And as a result of that, we've opened up an operation under the under the brand PitchBook. PitchBook is a Morningstar company, and it's one of the most comprehensive private equity data and research platforms globally. So we've established their Singapore-based regional headquarters, and we plan to service the Southeast Asia market through Singapore.
Okay.